Hello and a very warm welcome to our event on monetary policy in times of climate change. My name is Guntram Wolff and I'm the director of Bruegel, and today I'm actually replacing or stepping in for Maria de Merzis, who was scheduled to chair today's event, our deputy director, but who unfortunately fell sick today. We are very pleased to host today Cornelia Holthausen. Cornelia Holthausen is the Deputy Director General of Economics at the European, of the Economics Director General of the European Central Bank. And she has been very involved and one of the lead coordinators and authors of the climate chapter of the strategy review of the European Central Bank. And as you all know, the European Central Bank has reviewed its entire strategy, has put out a set of papers and announced its strategy, and in a sense the most novel and innovative part of that strategy review has been a pretty big discussion on how climate change affects monetary policy and how monetary policy strategy should evolve in response to climate change. The topic is, of course, controversial and has received already quite a bit of public debate. But what we thought today, what we wanted to do is really to hear from the author first, the author of the background document to the strategy review, hear the evidence that the ECB has and the Eurosystem has really put together. And then, of course, after her presentation, we want to hear from my colleague, Jean Pisani-Ferry, the senior fellow at Bruegel, and get his views, and then, of course, engage also in a public discussion on Slido, meaning you as the audience can come in and ask us questions and type in a code which I don't have at the moment, but which I will give you in a second, and I think it's also available on the website. The code is monetary. The code is monetary. So you type the code monetary on Slido, and then you can type your questions, and I'll get to read them, and we can ask them to Cornelia Holthausen, but also, of course, to Jean Pisani. As well as myself, I will also not be shy asking questions and making remarks. Without much further ado, thank you so much, Cornelia, for joining us today from Frankfurt. This is actually the first hybrid event at our offices in quite a while. So we actually do have, I would say, 5 people in the audience, sitting in the audience. But of course many more online, and we really look forward to your presentation, and you know, I really look forward to discussing with you and with Jean. Thank you so much for being here with us online today from Frankfurt. The floor is yours.
Thank you very much, Guntram. So it's a pleasure to be here, even if only virtually. I'm very sorry I did not manage to come today, but it's nice to at least see the room that you're sitting in and the small audience that's really on site. So let me try to share my screen. Can you see it?
No. Yes. Yes, now it can be seen.
I think there's a way to change the...
Yeah, now it's better, it's bigger.
Okay, very good. Excellent. So, thank you very much for this invitation. So, as you already said, the climate change workstream was one workstream of our strategy review that we concluded earlier this year. And it was indeed, I think, the most novel part of this whole endeavor. If you had a look at the report, you will see that it has around 200 pages. And that's because we summarized a large part of the paper is summarizing the available literature, and then going more into what climate change means for monetary policy, and then also developing an action plan for the ECB. And this is what I will also focus on in today's presentation. So on the 8th of July was when the action plan was published together with the rest of the strategy review. And then on 21st of September, a number of occasional papers were published, and one paper was the one that you see here on climate change and monetary policy for the euro area. So I had the honor to be editor of this, one of the editors of this whole process. As you can imagine, many business areas across the ECB contributed to that, and also many contributors from the national central bank. So it was really a joint endeavor, and there's a lot of work going on right now in the central banking community to try to understand what climate change means for monetary policy. So this is the outline of today's presentation. First, to outline why a central bank should at all care about climate change, because as you said, it's a bit a controversial question. Then secondly, to discuss the implications for the conduct of monetary policy, and then finally to elaborate on the action plan. So let me start with the first topic. On why the ECB should care about climate change. I mean, you will have seen many charts that demonstrate that the impact of climate change is more and more visible. So here you see how temperatures have been rising over the past 150 years, and in particular to note that actually in Europe has been more affected than the global economy by this rise in temperatures. Also, the number of extreme events has been increasing over time, and notably the percentage of that is weather related. Yeah, so climate, meteorological, hydrological events has been climbing up over time. So all of this implies that with the ambitious targets that policymakers have set, probably more an accelerating pace of policy actions is required to achieve those targets. And the paper outlines also on the envisaged policy mix, and makes the point that carbon pricing is widely regarded in the literature as the main tool to combat a rise in temperatures, but it also should be accompanied by policies that enable the transition. So policies that lead to a flexible labor and product markets that can facilitate a transition, and also financial market reform that can enable that. And of course, any type of policy action will also impact the macroeconomy as a whole, and this is where the interest of central banks come in, of course. And what we show in the paper is that if we have early mitigation policies, so an orderly transition to a new climate economy that is done in an orderly way, then the output losses that could be expected are actually in the long term contained, and we also see that there's less pressure on inflation. So this is the study of this type of effects is very, very relevant for us. So why does the ECB care, and why should we act? So as I said, the climate change and the policies, they do affect the outlook for price stability, because they impact on macroeconomic indicators, on financial stability, and also on the transmission of monetary policy. So this is one reason we need to study very carefully what's going on in the economy, so we can adapt our models in the best possible way. The second reason is that actually climate change and the policies affect the value and the risk profile of the assets that we hold in the Eurosystem's balance sheet. So the Eurosystem both has assets that it accepts as collateral for when it gives out funding to the banking sector, but also, of course, we have, in particular, since the financial crisis, have quite a large portfolio of assets that is also that may be affected its riskiness may be affected by climate change. So we look at this very carefully also from this perspective, because of course we have an interest of limiting the risk. And the third reason that can be employed is that the Eurosystem shall support the general economic policies of the Union with a view to contributing to the achievement of the objectives of the Union. So, of course, without prejudice to the objective of price stability. So that's a third broad category of reasoning. Now, as a first step, we see very clearly that there's a need to better understand the impact of climate change on the economy and on monetary policy. So it's really an area where work is starting at many different places across the Eurosystem, but also in other central banks, to try to understand that. So what are implications for monetary policy? What are risks to the financial system? And what would happen if policy action in other areas would not be sufficient to contain the rise in temperature and hence would lead to really a more physical risk? Well, one very first step will have to be that we have a better data situation. Yeah, we need more comprehensive information on carbon emissions and the climate exposures of banks and debtors, and that's a prerequisite really for us to act when we think about the assets that we have in our portfolio. And then thirdly, there is a need to revise our macro models and the projections that we do on a quarterly basis. And here, some key challenges are that climate change is very much of a long-term nature, whereas we have a medium-term perspective in central banks. There are many non-linearities and there are heterogeneities across sectors and also across regions. There's a need to model the explicit role of the energy sector and the climate policies. So really work is going on in many, many different areas of the central banks in order to understand this better. So let me come to more specifically what are implications for the conduct of monetary policy. And here again, I think we should distinguish between physical risk and transition risk. And both can affect the conduct of monetary policy and the ability of the ECB to deliver on its price stability mandate. And there's a lot of empirical research that is still missing and scarce, so we need to fill this gap. But let me point out a few aspects here. So first of all, when we think about the monetary policy transmission channel, there may be a stranding of assets that's happening. Yeah, if we think about physical risks, there could be a sudden repricing of climate-related financial risks that could weaken financial intermediaries. Yeah, if you think about the credit channel, financial losses could reduce the net worth of borrowers. So you could have issues of profitability and the value of collateral. And you might also have more non-performing loans that are related to this, to physical risk. And if we think more about transition risk that is related to the ongoing policies to mitigate climate change, yeah, so there's a lot of uncertainty about the timing and the speed of the policy responses. So this could raise risk premia and lead to more volatility. And then very importantly for us as central bankers is also that the natural rate of interest will likely be affected. And there are many different channels by which that can happen. So you could have, for instance, if we think about heat stress, yeah, you could have lower productivity and labor supply and a higher morbidity. And all of this could put a dampening effect on the natural rate of interest. But then on the other hand, if we think about a forceful transition towards more green technologies, and this could push the R star up. Yeah. So both effects will probably prevail in some form, and maybe one will materialize earlier than the other. So the current best guess of the network of greening the financial system is that the net effect would be negative. So R star could go down. And of course, for central banks, that is an important message because it would imply a reduced space for conventional monetary policy tools in an environment where we are already relatively close to the effective lower bound. And really the heightened size and volatility of shocks and the higher uncertainty would also complicate the assessment of the monetary policy stance. So here we could, in the long run, also see a steepening of the trade-off between output and price stabilization. Now, if we look at the design of the monetary policy strategy, again, if we think of transition policies, they could have a sustained impact on inflation volatility and possibly also underlying trends. And this could call for a re-examination of the role of either headline or core inflation. Yeah, and this is because if we have if a central bank would target the headline inflation, it could better control it, but it may lead to higher output losses. Whereas if we look more at the core inflation, then we would need to, maybe tolerate a higher headline inflation, but could, on the other hand, contain output losses. So this type of trends would be exacerbated with climate change. But we see clearly that, again, here, these challenges for monetary policy would be contained if we had an orderly transition. And in our paper, you find some scenarios, some simulations on this. And secondly, also the horizon issue that I mentioned before, people call it the tragedy of the horizon, is that actually climate change is really a very long-term trend, whereas we look at a medium-term outlook of just a few years that may not be sufficient to understand fully. And then again, I mentioned before the lower the likely lower natural rate of interest R star would make it more likely that the effective lower bound would be hit because there may be more frequent negative demand shocks and a less effective transmission. So it could be that the climate change in that sense would make the case for resorting to non-standard measures more frequently in the future. Now, another impact that is being studied is the effect on financial markets, on financial institutions. We have so far there's inconclusive evidence really whether in financial markets climate-related financial risks are priced in well. So there are different models coming to, the evidence is really a mixed, although some more recent evidence has come to the fore that suggests that that it's really priced only partially in financial markets. And then there are also stress tests, and the ECB has recently published the results of our stress test that suggests that capital losses for financial institutions could be significant again if the transition was disorderly, but then more manageable in an orderly transition. And then conversely, so it's also not only that climate change affects the financial markets, but also the financial structure can affect the speed at which the economy decarbonizes and adjusts. So equity markets, for instance, could be strengthened to support the innovation, and a green bond market, which at this point is still immature, could also support the transition, even though so far the evidence on that is mixed. Now let me come to our action plan for climate change that we announced on 8th of July. So we announced that we would further incorporate climate change considerations into the ECB's monetary policy framework. And the aim of this plan is really, first of all, to enhance the resilience of our monetary policy framework. And I mentioned a number of reasons before. But it's also to promote a bit a catalyst role of the Eurosystem vis-a-vis financial markets. So if you imagine that the ECB would adjust its collateral framework, for instance, or its framework for purchasing assets, this could also be kind of a standard setter then for financial markets. Now, any implementation of an action plan needs to be aligned with the progress that's being made on the EU policies and any initiatives in the field of environmental sustainability, disclosure, and of reporting. And that's because we need to see what type of data will be available out there, and to be kind of aligned with the possible taxonomy that the EU will implement. And any activity within the Eurosystem actually is coordinated by our newly established Climate Change Center. If we look more in detail into the action plan, there are several areas where action will focus on. So the first is on data, statistical data. As I mentioned before, so far the data situation is far from optimal. We don't know so much about carbon emissions, carbon footprint of the firms that are out there, neither on their plans to mitigate those. So we need to gather more data, and disclosures of climate-related variables is really a priority that should be pursued further. We also need to focus to understand better the effects on the macroeconomy and the monetary policy transmission. So here we need to build more knowledge. We need to understand better what is the Eurosystem's exposure to climate risk, and also what the private issuers' exposure is to climate risks. And in this respect, it's also important to understand how credit rating agencies are treating climate risks. Are they already incorporating these risks into their ratings or not? And what are the plans going forward? So this is very relevant for us. And then finally, on monetary policy instruments, we need to see what type of how we can adapt our instruments to reflect all of the changes that are taking place. So broadly, I think we can say that we have actions in these four different areas. So first, on disclosure support. So first, I think the ECB or the Eurosystem can provide input to regulators and standard setters, such as the Commission, for instance, to share with them the expertise that we are gaining at the Eurosystem. We can also lead by example by publishing our own climate-related disclosures. And finally, we can, and this is being discussed, and to introduce disclosure requirements for private sector assets as a potentially new eligibility criterion or as a basis for a differentiated treatment for collateral and asset purchases. The second area where we promised action is in the area of stress testing and credit ratings. So we have started to conduct climate we are starting to conduct climate stress tests on our own Eurosystem balance sheet to assess our risk exposures to climate change and also to enhance our risk assessment capabilities. And the ECB will also continue to enhance the incorporation and disclosure of climate-related financial risks in credit ratings for the assets that we buy and accept as collateral. And turning to collateral, indeed, here we could consider climate change risks when we review the valuation and risk control frameworks and develop according proposals. So, for instance, does the theoretical collateral valuation methodology, would it adequately consider pricing signals that are related to climate change risks? And could there be a case for applying differentiated haircuts or for steering the composition of collateral pools? So right now our collateral risk management framework is really very risk-based, so one would have to see how this new climate change risks enters there. And then we would need to continue to monitor the financial innovation related to the green and sustainable aspect, and to assess also the first experience with sustainability-linked bonds that we accept as collateral or for the purchase program. And then the final area would be the corporate sector purchases. So here, ongoing work is related to our due diligence, and this is being further developed as we speak. So concerning both climate change and the related risks for each issuer, and there are a large number of issuers that my colleagues are looking at. But still, we need further work here for more concrete proposals and implementation to understand which is the best type of data that we should use for this type of analysis. What is available, what may be available soon. How should we ensure consistency and level playing field issues across issuers? In particular, we have some very large issuers that may be very advanced in this type of and technologies, but also smaller issuers where this is not yet the case. And we have to see how we could best drive change and incentivize. And also be forward-looking in the sense that we allow for issuers appropriate incentives and planning. So let me just come very quickly to the aspect of market neutrality. So we know that the market for carbon-intensive assets is characterized by some potential failures. Yeah, there may be externalities associated with climate change. There's a lot of asymmetric information at this point in time. And so far, the ECB is applying market neutrality principle in its purchase programs in the form of benchmark portfolios that we use to guide our purchases on. Climate change could be a reason to adapt this principle. So maybe the principle that we employ at the present, namely to apply very strictly the total nominal market outstanding in our operations, could be considered undesirable if we think that carbon that the lack to price a carbon footprint is leading to an allocation of resources that's not efficient in some way. So and there we are still thinking about whether possibly these allocations, whether there's a case for modifying them, and we are currently looking at costs and benefit of that, and to see how we could guide our monetary policy operations in the future, and of course always considering whether such modifications are justified in light of our price stability mandate. So I think I can stop here. Thank you very much.
Yes, wonderful. Wonderful. Thank you so much, Cornelia. That was a very clear and comprehensive presentation about this very important work stream that you, of course, guided at the ECB. And of course, now we have time for a discussion and also to hear from my colleague Jean about his thinking. But I think I want to already throw one question at you, Jean, and also, of course, at you, Cornelia, which is really about the effect of climate change on the real interest rate. I mean, the real equilibrium interest rate, the R star. You have been very strong, I would say, in your view that, Cornelia, in your view that R star might fall as a result of climate change. Now, I have to say, I read that chapter in the occasional paper, and I was far less convinced even by the evidence in the chapter. And I have to say, when more broadly, when thinking about the issue, my intuition would be that R star might actually increase. And the reason is very simple. I mean, we basically have to invest 2 percentage points of GDP over the next 15 or 20 years more than we did in the last decade per year. That's a major increase in investment. And so that should, in principle, increase the equilibrium real interest rate. So I'm not quite sure why this negative result is so strong in your study. And if the positive result holds, then I'm wondering, perhaps R star has already moved up quite a bit, and we just haven't noticed because there is so much ongoing in financial markets because of ECB intervention. And if that was the case, and there I guess I want to push you, Jean, and also, of course, also you, Cornelia, on that. If that was the case, well, isn't monetary policy perhaps even excessively accommodative at the moment and needs to be tightened? Not that that's my view, but at least to push that debate. So I think that's certainly one thing we want to discuss. But Jean, I'm sure there's many other points you want to discuss, and Cornelia, of course, you will have time to also react.
But do you want to give a chance to Cornelia to respond now? Because I think that's an important point.
Well,
and I would be close to you, at least in terms of the outlook, because if you take just 2 percentage points, that's more than the decline in global investment rate that has been observed over the last 2 or 3 decades. So it's really major. And
okay, so
that would be first order.
We both agree.
I would perhaps disagree with you on the fact that we're seeing it already, because we don't see really the investment.
Right.
So perhaps market could be forward-looking, but the evidence is not there.
So perhaps we get Cornelia to react on that point. I don't. Is Cornelia seen actually at the moment on the screen? Because now I see the presentation here. Cornelia, did you hear us?
I can hear you very well. I heard your question. Now I can also see. I think that I'm back on your screen. So. Yeah, it's a good question, and I try to be evasive and say that it's the NGFS that estimates that the effect will be negative. Because I agree with you, it's very, very hard to say, and there are so many different factors at play. And I think again we have a non-linearity here. So we may have some more investment, of course, over the longer term, but we will also have some negative effects and I mean, this year seemed to suggest that maybe physical risk is materializing earlier than we all had expected. I mean, we saw floods and heat waves and so on, and we cannot for sure say that this is related to climate change, of course. But I had the feeling that maybe people are waking up now that it's really a real possibility, not only in the long term, but also in the medium term. So I think we really have to wait how everything plays out and how quickly policymakers will also react. We all know that I mean, we have now the NGEU, which in Europe will place a lot of emphasis on green issues and on starting the transition, supporting the transition. So I hope that can give a boost and indeed lead to a more green innovation that we then would dearly need to support the transition, and that would indeed support also our star. But it's politics, so we don't know how forceful and with what timeline that will happen. So I'm really I'm in between here on this question.
Thank you, Jean. Please.
Thank you. If we can put the slide on the screen. But in the meantime, let me really start by congratulating you, Cornelia, your team, the ECB, and the Eurosystem. It's really frontier work. I mean, it's not that we are catching up with anyone. It's really the first systematic examination of the issue, and this is an absolutely major issue. So really, I think that I'm very happy to have this opportunity to, give raise a few questions on your presentation. If you could put the next slide. Okay. I think I mean, you said that was but let me re-emphasize it. There's 3 different sets of questions I think we're dealing with. One is what you call physical risk. So it's how climate change can affect the conduct of monetary policy. So this is an important question. We have, impacts on Earth star, impact on volatility, and then indirectly it may affect also the channels of transmission of monetary policy. We may see a bit of it, but it's still a long-term issue, right? And in my view, it's not that different from many other questions we may ask ourselves about technology, about aging, about geopolitics, about whatever, can affect the environment in which monetary policy operates. Or globalization, for example. There has been a whole discussion on globalization of inflation. It's a bit the same. I mean, it's something that's exogenous to monetary policy, and that affects the way monetary policy operates. So I think this is both important, but it's not completely new in terms of the nature of the questions that are being asked. Now, the second question is how climate action by governments is going to affect monetary policy. And this is a different question. This is very much closer to the traditional discussion on the relationship between fiscal and monetary policy, and perhaps better, between structural reforms and monetary policy. So there are two policy players, and those two policy players somehow they interact, or at least the outcome depends on their interaction, and there is an implicit game between them as regards the way each commits to delivering results on its particular responsibility. And so this may lead to this policy game, this may lead to policy-induced shocks. And it's particularly difficult in the case of climate, because climate is a field where the credibility problem is massive. I mean, I'm going to show later a graph, but you all know, the commitments, the commitments in principle are very distant from what is being implemented actually. So there is a massive credibility problem, and so this is an issue for the way policies by action by governments and the monetary policy will interact. And it's even to the square, because you also have the interaction with what other players do, so international coordination. So that's the second question. And the third question, which is again different, is how monetary policy can contribute to fighting climate change. So it's Article 127. That can be collateral policies, that can be the accommodation of relative price changes, and this is a completely new question, because we're not used to asking this kind of question. This is a question about how to interpret the mandate of the ECB. So I think it's important to distinguish those three questions, and the first two sort of correspond more or less to physical risk and transition risk. Now, can I have the next slide? Okay, so we discussed Airstar, but there is something on which we may have more likelihood or more certainty, which is how lower growth and a more volatile environment could affect the probability of hitting the lower bound. So this is from a work done by an economist at the Fed, who looked at actually not just the impact of climate events on growth on average, but the impact of climate events on the distribution of growth. And what he finds is that the probability of deep recessions is increased. So if you do quintile regression, you find that the probability of it doesn't change so much at the top, right? So this is a distribution of the growth rates in the case of India. This is the current situation. This corresponds to a deteriorated climate, and this is a simulation also with a further deterioration. So what you see is that here it doesn't change that much. So it doesn't change that much the high growth performance, but it changed enormously the low growth performance. So the recession are likely to be deeper. And this is a first order question for monetary policy, because it means that monetary policy has to be more reactive, but at the same time, it's more likely to hit the effective lower bound. So this is a question, I think, there are a few questions on which I think we can go one step further and be perhaps a bit less speculative and more so affirmative on what it may imply. And if I can have the next slide, just to finish on it. So the second is this credibility issue. So this is the illustration of what I was saying. taken from the IEA report of last week. So they have 3 scenarios on CO2 emission for the world, okay? So this is what should be done, net zero emission, okay, by 2050. This is what governments have committed to, a non-pledge scenario. And this is what actually they are doing, right? So this is a stated policy scenario. So this is with the policies in place. So the gap here, the gap between the 3, now between, everybody says we should fight climate change, and then, what's announced is far, but even there is another gap between what's announced and what is actually done. So which is, a first order credibility problem. And here the question I have is, we don't have that many institutions with credibility. The central banks are institutions endowed with credibility. What could they do to sort of, in the interplay between the monetary policy response and what government do, to help solve this problem of credibility, which is with us on a daily basis? Just look at the reaction to the rise in the energy prices, and immediately governments rushing to ask whether they should do something to lower the price of energy. So I think, that would be an interesting avenue for research and for discussion, to see how central banks could somehow, make clear that the way they're going to respond will depend also on the way governments respond, and on whether governments are actually investing in doing what they pretend they will be doing. Let me stop here.
Wonderful. Thanks a lot, Jean. Thanks a lot, Jean. That was also extremely stimulating and very, very interesting. Perhaps let me push you on the last point, and then I also want to get back Cornelia, and I hope she can reappear on the screen so that we can see her. But let me push you on your last point, on the credibility point. I mean, it's quite obvious that the key problem in climate change is the credibility problem. I mean, we all announce, but we don't implement, and that's been ongoing. Now we have the COP26, right? So it's the 26th meeting where we discuss this issue. So it's a huge credibility problem, and so some people have now been suggesting that what we actually need is a central bank for CO2 emissions. So meaning we resolve the credibility problem of withdrawing emission rights by actually putting that into an independent institution, a central bank for emission trading system allowances or something of that sort. Perhaps even the central bank itself doing that. Is that what you're suggesting, or where do you see? How do you see these kind of institutional solutions? So taking the stuff out of the daily politics, where I think we know the credibility is just not there, and there's a real time inconsistency problem, into an independent institution being in charge of that.
That the proposal by Gaulier and what's his name?
Gaulier.
Delpla.
Gaulier and Delpla.
Gaulier and Delpla.
Yeah.
Which is to sort of they call it the central bank for carbon. So it's basically using the same type of sort of institutional setup to solve the credibility problem. So government would set the quantity target, but then essentially the central bank would translate that into a price, and that would also ensure that they avoid the fluctuation in prices. Although very much the same type of problem central banks are facing. So to translate a sort of overall commitment into something operational. That supposes that the government would have the capacity, the political courage to do it, and I sort of have my doubts on whether they will be doing it. And also, I think the more we think about climate change, the more we realize that it's not just a price. In many fields, regulation, setting standards, is as important a tool as having the right price. I'm not saying the price is second order. I'm just saying it's not going to be the implementation of the climate pledges through a price. So, but what I had in mind is is something a bit different. So sort of, just to take a very simple image. So if we assume the price of carbon is going to rise by, I don't know, 10 euros per year, over the medium term, which is, 2030, and GFS say it should be 160 euros per ton. So let's assume something of this sort, okay? So we have a sort of repeated shocks to the relative price. And so there's a question of how the central bank would react. I mean, the degree of accommodation, okay? Should they be treated as shocks to the price of oil, where the first round effects are accommodated, the second round effect not? I mean, and you could imagine the central bank, indicating how it would react to the development of this sort, but also indicating that if governments, don't deliver on their pledges, etc., it will react differently. So I was thinking more in terms of the incentive for government to act that could result from, the announcement by the central bank of its own policy.
Yeah, Cornelia, perhaps I can push you also on that point. I mean, not that I want you to declare that the ECB becomes the central bank managing emission trading allowances, but really the contribution of the central bank. I mean, if you can say a bit more, the contribution of the central bank to resolving this credibility issue. And I think, it's obviously very clear that the president, Christine Lagarde, is very outspoken on the matter, and that adds to credibility, the credibility of the European Union being serious about this issue. And it holds politicians also not to account, but it reminds politicians about their duties. Now, as soon as you start, and you talked about this, but you were quite cautious on sort of the instruments, right? I mean, so what kind of instruments beyond the speaking do you want to implement? And I know that you are discussing that, and it's still an ongoing review. But the more you can tell us about, where you see sort of more on the operational side, the concrete things the central bank could do, be that the asset allocation, be that stronger measures on the financial side. So can you just share us a little bit more your thinking in this dimension, and how that in the end can help increase credibility of climate action?
I was muted. So sorry, let me stress again that climate change is a governmental responsibility, it's not a central bank responsibility. And we always have to be very careful that we stay within our mandate. And Jean and I, we both refer to Article 127, where it says that the ECB shall support the policies of the European Union. But I think there are really diverging views whether that means that, okay, if the European Union is now interested in tackling climate change, that then we should by all means support it, because we still have our price stability mandate. And that's also the way we argued then in the paper, and the Governing Council agreed to this, that we should act within our mandate and need to stick to that. So so that means that price stability always is the first fiddle that we're playing, and then everything else is an add-on. So we can support climate policies, but not if it jeopardizes our price stability objective. So we look at the mandate very carefully. Now, but still, that being said, I think a central bank can still support the policy. And you mentioned the communication aspect that Christine Lagarde is very much leveraging on. But we can also support in other ways. I mean, we can support analysis, we can provide data if we have it, and we can make it a topic, or just like you do, support academic research on the topic, of which a lot is needed, as I said before. So I think there are also secondary ways in which central banks, as important market players, can be active. Now, you mentioned the credibility problem, and of course, central banks, they rely primarily on being credible institutions, and And so we should not overpromise anything that we then cannot deliver, might not be able to deliver. And this is why our action plan remains at this vague level and more in terms of principles and not promising that we would, I don't know, have really implement this or that action in our collateral framework on our bond purchasing programs. And I stay vague because of this reason, because really it's an area that is still developing and where we do need to learn. I mean, we have an action plan that spans over the next 3 or 4 years or so. And I can tell you that if you have ever been in political institutions, 3 years is nothing. So that passes very quickly. And in the Eurosystem, we have a complex system on top of that. So everything needs to be looked at very carefully and understood before we take any actions here. And as I said, the data situation is simply still not so good that we could firmly promise that we rely, that we can make our actions being dependent on certain data availability.
Do you want to react to one point and then?
Well, first of all, I obviously didn't say that the that the ECB should exceed its mandate, but the question is how to interpret 127. So I was suggesting, knowing that this type of shock is coming, how this type of shock would be, treated. But let me say I'm a bit uncomfortable with something that the ECB has been saying repeatedly, is that there are risks involved in climate change that affect the valuation of assets, and that, as part of the financial stability mandate, but also perhaps even, and you suggested that as part of the monetary policy mandate, this is something the ECB should care about. Now, I completely agree, but there is the opposite risk, which is precisely that, financial institutions are investing in climate action, in the greening of the economy, and governments do not deliver. And in terms of financial risk, it's exactly the symmetric of the other risk. But it's not treated symmetrically. I never heard the ECB saying, oh, be careful, don't go green, because perhaps government will not deliver on their pledges.
That's right. That's a nice point. Do you want to react on that point, Cornelia? No, you're muted. You're muted.
I must admit we haven't looked at it in that way. But I mean, I think banks should not only react and start to deliver conditional on what policymakers do. No, I mean, they can start to act now independently, and we all know that it's a big enough problem so that all of us should do something. What's the problem is if we don't have a well-functioning framework that comes from politicians, it's not so clear what these banks should do and how financial players should adjust. And that's then maybe where a central bank comes in. No, if we say we don't have a good framework for classifying our actions in terms of the carbon footprint, then also central banks could, by making requirements for their collateral framework, for instance, they could be the catalyst that I mentioned earlier. But of course, it does not make sense if this does not work hand in hand with what the politicians do. So, but
right,
I see it's
right.
a tricky question.
But there is a risk of, obviously, if politics underdelivers, there is equally a financial stability risk that you need to take into account as a central bank. I mean,
according to your IEA, the total return on green energy companies, renewables, has been 3 times the return on brown companies. Yeah. So good news, unless it's a bubble.
Unless it's a green bubble, because governments will not deliver. That's right. But I think in view of the time, we have five minutes left, and I do want to ask some questions from the audience to you, but also to you, Jean. And I will not ask the question about Jens Weidmann's resignation, which I get in here, and what it all means for the ECB's climate policy. Of course, having worked at the Bundesbank, I can talk about that at some stage, but not now. This is really about climate policy, so, and the central banking. But I do want to ask you a few of the questions, and I think one question here by Fabian Hungerland is, you know, what if so many assets are classified as unpurchasable because they are brown, that the number of available assets is too small for quantitative easing to be effectual? And so then I guess what I want to add a few questions. I mean, just collect a few questions. Otherwise, we will not be able to do justice to them. So the second question here is. Great presentation, thank you. To confirm, does the ECB already include climate into its economic forecasts? If not, do you have some papers on that topic? And then there is a third question by Ari Slior, who asked, when you say that the ECB might have to resort to unconventional measures more often in the future, what kind of measures are you referring to? Let me see whether there's one more, perhaps one more by my colleague Simone Tagliapietra. Since we are discussing central banks in plural, do we see others, the US, China, and the Japanese central bank, moving in the same direction as the ECB is doing on green? So perhaps those four questions, if you can give them very short telegraphic replies, and then we have to conclude.
Of course. So on the first question, what if we have too many assets that are classified as not being green? So that will not happen. And that's because the price stability objective will always be the most important question for us. So we would not allow that we have a tilting, say, of the purchases towards green assets that would make it impossible to reach our goal. So that's precisely one. That's one of the key prerequisites, that we don't endanger our ability to conduct the purchases as we see them needed. Then in climate change in our economic forecast, so and any papers related to that, so I can only guide you to our workstream report that I presented here today. There is a lot of reference to papers. And so far, climate change is not really only marginally in our models, but we are right now working a lot on that. And also the Network for Greening the Financial System, you may want to look at their website as well, because that's where many central banks get together and discuss climate change and how to deal with it, also in terms of macroeconomic scenario and analysis. With unconventional measures, I mean everything that is goes above or goes beyond lowering and raising our main interest rate. So everything that we have been doing over the last 13 years. So most of our the ECB's existence. So anything related to asset purchases that are there in order to provide monetary policy accommodation at the point in time when interest rates cannot easily be lowered further. Our targeted longer-term operations would be part of this unconventional toolkit, or also the forward guidance that we have provided over the past few years. So this is what I would broadly say is unconventional. You could also put negative interest rates into this bucket. And then finally, on other central banks, yes, there are many, I think, around the world. Most central banks are looking at climate change, and the US, the UK, Japan are only a few of them. But I think it's really a broad, very broad endeavor. Also, I mean, within the NGFS, but in other fora also, there's a lot of discussion among the various central banks how to best advance.
Okay, wonderful. Did you want to, Jean, say any final reaction on any point?
Perhaps on one point about stranded assets, I think we should also take into account that the other side of the stranded asset is stranded capital. So that means we may possibly have, as a consequence of climate action, part of the capital stock that has to be put aside prematurely, so a negative supply shock. And I think that's also part of the discussion. I'm saying that because too often, scenarios that are out just assume away the problem. And I think that's not right. It should be diagnosed very clearly.
Okay, wonderful. Thank you so much, Cornelia Holthausen, for your presentation and your discussion today with us. And congratulations again on this important report and this important stream of work. And congratulations to you personally for having brought this all together, but also to the ECB for highlighting this important topic and prioritizing this important topic. And thank you, Jean, for your remarks and comments. And thank you to our audience for your numerous questions and remarks. It's been great to discuss that topic today with all of you. Thank you so much, and until next time, bye-bye.
Thank you, bye-bye.
Thank you, bye-bye.